Hey everyone, this is this week top down analysis trade review of this week live top down analysis. Before I start, make sure to like and subscribe to the YouTube channel to get alerted when I drop a new one because I do a top down analysis every Monday. And if you want to understand what will price will be doing based off my own trade idea of what I'm looking at, what price will do for the week, then make sure to tune in during that time for you to have access to the live top down analysis and to have early access because it's going to be posted completely free on the YouTube channel. So first, let's talk about the dollar index. Now, if you're new to the YouTube channel, you know that I normally do my first analysis on the dollar index to decide on where I will be trading going in the week. So I talked about dollar index on the live top down analysis on Monday. I talked about price trading lower to run the sell side liquidity. I gave you guys the reason I was anticipating lower prices. First, I talked about the daily fair value gap, how price have traded below the daily fair value gap, used it as an inversion fair value gap to trade below the mid range of the other block on Friday. So price was below the mid range of the other block. And how I do measure the mid range is using the body of the candle. I measure from the high and the low of the body of the candle. When price trades below the mid-range, makes it an invalid order block, which means there's a low probability of price using that order block as a support level to trade higher. And I told you guys the next drawn liquidity is to see price run the sell side liquidity. So on Monday, price traded lower, came close in running out the sell side liquidity, but did a retracement back to a new week opening gap, which was on Tuesday. Price respected the new week opening gap on Tuesday, traded lower, and on Wednesday, price traded lower, took out the sell side liquidity. Thursday, retracement back to the range. Friday, price took out Thursday's high and the retracement back to Thursday's range, which price respected a fair value gap where I'm looking at going next week, which might lead to lower prices. But first, we are talking about on how price respected the new week opening gap to trade lower in running out the sell side liquidity. On the 1 hour time frame of the dollar index, on Monday, price traded lower came close in running out the sell side liquidity. I was looking at lower prices on the lower time frame to anticipate a run on the sell side liquidity on Monday's price action on Euro USD because I was very confident enough that if prices have traded lower to this area, there's a high chances of price running the liquidity before any retracement. Which price did the retracement and I was stopped out on Euro USD. Once I get to that currency, I will explain more about it. Leading to this retracement, price did retracement back to the new week opening gap, respected the new week opening gap, shift in structure, auto block, price did not retrace to the other block, but traded lower open range gap, traded an open range gap, traded lower retracement 1 hour fair value gap before the run on the sell side liquidity, taking out Monday's low. On Wednesday, retracement, Thursday, run on Wednesday's low, retracement, and on Friday, took out Thursday's high, retracement back to the range. So far last week, the most active time on last week was on Tuesday and on Wednesday, where price was fully aligned with the idea of trading lower. Because I've told you guys that when you have a bias and price retrace to a point of interest aligned with that bias, those are areas for you to take advantage of, which is the new week opening gap. First was supposed to be the 1 hour fair value gap, which was really close to the sell side liquidity, which I explained that price traded through that 1 hour fair value gap, but at the same time, you just pay attention to a higher point of interest for price to use it as a resistance area for it to trade lower, leading to lower prices or price to take out the sell side liquidity. On the daily time frame of Euro USD, I talked about price respecting the inversion fair value gap on this week live top down analysis. I talked about price respecting the inversion fair value gap, that price respected it on Friday, that there's a high chances of price going for the buy side liquidity, which on Monday price traded higher, came close to the buy side liquidity. Tuesday, retracement to a new week opening gap, respected the new week opening gap. Wednesday, traded higher and running out the buy side liquidity. Thursday, price took out Wednesday's high, did a retracement back to the range, which formed this daily fair value gap, just like the dollar index. And on Friday, price respected it, traded back to the range. On the 1 hour time frame of Euro USD, from the opening price, price traded higher, came close to the buy side liquidity. Now, for those in the signal group, know that I posted this trade telling you guys to buy from this other block, which is close to the new week opening gap. I posted the signal to you guys to put your stop below the new week opening gap. As our drawn liquidity is to see price run the buy side liquidity. At the same time, I posted a re-entry after the shift of structure on Tuesday. I posted this re-entry from the breakers block. I told you guys to use it as a re-entry after price traded to the other block, respected the other block and respected the new week opening gap, not going below the new week opening gap, stopping us out where our stop was below the new week opening gap at this swing low. Told you guys that price respected the breakers block, traded higher to run the buy side liquidity. There was two ways for you to take advantage of the setup on a 1 hour time frame perspective, which most of the trade that is posted on the signal group is based off the 1 hour perspective on an entry level. But on a lower time frame, I was stopped out from this retracement trading lower to the other block, back to the other block. After the first test on the other block, I was looking for lower time frame entry to back to add up my position to the main position of me entering from this other block. So price respected the new week opening gap, traded higher, retracement, other block respected the other block, took out the buy side liquidity. On Wednesday, a complete run on the buy side liquidity. And on Thursday, traded higher, took out Wednesday high, did a retracement, closed. And on Friday, price respected the daily fair value capture trade higher, but it wasn't correlated with the dollar index, so I won't look for higher prices for price to run the buy side liquidity yet. I wanted to see the correlation. Led to lower prices taking out the swing low back to the daily fair value gap, and currently there isn't any shift in structure leading to higher prices for price to run the high. But going in next week, we might see a shift in structure to run the buy side liquidity. So the trade that I posted was this trade, and the stop was at this swing low, and the target was the buy side liquidity. It was a 5 hour trade for price to run the buy side liquidity. The re-entry was at this sort of block, which is a breakers block, swing low, and overall TP was the buy side liquidity. It was a 1.3 hour trade for the second entry, but it was for those that didn't take advantage of the main trade to just use this in recruiting losses or trying to balance your account with it or trying to get involved, not risking more than 1%, just to get involved in the main trend for price to run the buy side liquidity. On the daily time frame of GBP USD, last week or this week live chart analysis, I talked about price we're expecting the breakers can do. I told you guys that I want to see price trade below Friday's low. We expect the breakers can do, and I will be anticipating higher prices for price to run the buy side liquidity. On Monday, price traded higher, taking out Thursday's high, retraced back to the range. Tuesday, price took out Friday's low, created to the breakers candle. We expected the breakers candle. Wednesday, price traded higher, taking out Monday's high, running the buy side liquidity. Thursday, price took out this buy side liquidity, did a retracement back to the range, forming a daily fair value gap. Friday, price took out Thursday's low, trading into the daily's fair value gap. On the 1 hour time frame of GBP on Monday, traded higher, took out Thursday's high, retracement back to the range. Tuesday, price took out Friday's low, and you can see the shifting structure. Your entry, 1 hour fair value gap, that's your entry. This is your entry. Retracement to the entry, we expected it. At the same time, you can see the other block fully aligned with the idea at the same level of the 1 hour fair value gap. This is your entry. For those in the signal group, this was our entry, anticipating higher prices for price to run the buy side liquidity. This is your entry at the other block. Stop was at this swing low, and our overall target was the buy side liquidity. Now, I didn't head on to this trade after the run on the buy side liquidity because a run on the buy side liquidity was aligned with the dollar index for price to run the sell side liquidity. So price took out the sell side liquidity on the dollar index on Wednesday, and you can see the same Wednesday price took out the buy side liquidity. So that was a full alignment between both currency. So I wasn't expecting an impulsive price or price to run to the swing high from the daily time frame, which is the buy side liquidity. Thursday, run on the buy side liquidity, retracement forming the fair value gap, the daily fair value gap. Friday, retracement to the daily fair value gap. I wasn't anticipating higher prices to run this high because it wasn't aligned with the dollar index. So I was anticipating lower prices for price to trade lower to run the swing low. On the daily time frame of USD JPY, on this week live top down analysis, I talked about price retracing to the other block. That if price were to retrace below the mid-range of body of the other block, I will be anticipating lower prices. And I will be looking at price using the daily fair value gap as an inversion fair value gap, leading to lower prices for price to trade to take out the sell side liquidity. And if the dollar were to align with that idea, I will be anticipating lower prices, with the dollar was fully aligned with the idea of price trading lower. So on Monday, price retraced, traded below the mid-range of the other block, did a retracement to the other block, price respected the other block. On Wednesday, 1 hour shift in structure, traded lower, and the other block was at the same level of a new week opening gap, expected it, traded lower. On Thursday, retracement to the other block, expected the other block, which is the daily other block, expected it traded lower in running out Monday's low. On Friday, retracement back to the range. On the 1 hour time frame, on this week live top down analysis, I told you guys how I missed an entry where price did not retrace to the new week opening gap where it was my entry level for price to trade lower to the other block. which on Monday price traded lower to the other block. Tuesday retracement to the other block because price already traded below the mid range of the other block. So I was anticipating lower prices for price to trade lower to run the sell side liquidity, but the immediate draw on liquidity was this swing low. After a retracement to the other block, which was aligned with a new week opening gap, 1 hour shift in structure, and the entry levels was at this other block, anticipating lower prices, 1 hour order block. Price respected it, created a new swing low, retracement, re-entry at the other block. Price respected it, traded lower, took out the sell side liquidity. And this whole trade was fully aligned with the dollar index. I was anticipating lower prices because it was fully aligned with the dollar index. And after the run on Monday's low, I wasn't anticipating lower prices on the dollar index. So I was looking at price on what price would do next. And at the same time, price was at this new week opening gap, which might lead to a support for price to trade higher to run this high, which price did not actually run the high, but came close in running out the swing high. And the trade should have taken advantage of top at the swing high, target swing low. Those are around a 3.4-hour trade on USD JPY. And it was a very quick trade for you to take advantage of if you have been following up the top down analysis, the live top down analysis that I've been giving out for around, I think it's a total of 6 weeks now that I've been giving out this top down analysis before the week. And if you were to go to look at the accuracy on how I've been giving out the analysis and how right I've been on where price will be trading going in this week, going in the weeks of those top down analysis, you can see that I was around 80 to 90% right on where price should be trading going in the week, explaining the important points of interest on how I will be personally be trading going in those weeks. So make sure you check them out to understand how I do trade, to understand how I look at price, for you to understand more on how I view price and how I decide on my bias. You can learn how you can trade bias, how you can trade and sticking to your weekly bias, going through those old live top down analysis and always available on the YouTube channel. You just need to go through them for you to understand how I do trade. And that is it for this video. See you guys in next week live top down analysis.